Hey traders, welcome to Master the Market, where we help you become a market master. In today's video, we're going to be talking about a simple but effective way to day trade a company's earnings reports. This is going to allow you to take the gambling completely out of it and allow you to simply trade the trend of the stock. It's a strategy that I've personally used to make thousands and thousands of dollars, and it's definitely one that every day trader should know, so make sure to stay tuned throughout this video. We're going to be giving you all of the secrets of this strategy. Very quickly, before getting into that, I want to mention that we're currently doing a 50% off sale for the Market Master group. This is in honor of Thanksgiving. It's very limited time and it is very limited availability. So if you're interested in trying out our group, getting access to our day trade and swing trade alerts, our detailed trade plans, our live custom scanner streams, our group chat with like-minded traders, and all of the other powerful tools that we provide our traders in the Market Master group, you're now going to be able to access that at a 50% discount for, again, a very limited time. So make sure to check out the link down below in the description to secure your savings. All right, with that being said, let's get into it. The first step to actually day trading a company's earnings report is, of course, to know which companies are actually releasing their earnings. This is something that you can see ahead of time. We actually have a section here in the Market Master group that is going to show us a list of stocks that are releasing earnings reports the following day, whether that be in pre-market or in after hours. There are plenty of different lists like this that you can find online as well for 100% free. And that's going to kind of just allow you to keep an eye on some stocks that are planning on releasing their earnings, put them in a watch list, and then look for trade opportunities in them the following day. What we're not going to do with this strategy is gamble on the earnings reports. We don't want to buy into them before the earnings are released in expectation of them beating earnings. You know, at the end of the day, even if it is a strong company, that is going to essentially just be a gamble. Things happen, and often companies are going to fail their earnings reports. That's going to, at least in the short term, have a negative effect on the stock. And many times, even if the stock has a bullish earnings report, we'll actually see the stock sell off to the downside as well. That's simply because a lot of times stocks will run up prior to their earnings. And then once that earnings is released, it's kind of considered a buy the hype and sell the news event. So then the stock will sell off to the downside as well. So again, what we're not doing is buying into them beforehand. We want to wait for those earnings to be released. And then we're simply looking to trade the price action once the price action already shows us how the market is reacting to those earnings. Now, to actually look into different filings and different earnings reports, the website that I prefer to use is going to be bamsec.com. This is a 100% free website to use. There is a premium option as well, but it's not necessary for what we're doing. And you can see I've typed in the stock symbol INOD here. This is an example that we're going to be going over here in just a moment. And it's a stock that I traded based on the earnings report and was able to make a few $1,000s in doing so. And what we'll see here is that there are different SEC filings that are broken up into different sections here on BAM SEC. And for the earnings reports, we're going to be focusing on the financial section. We have 10Qs and 10Ks. These are going to be the quarterly and annual earnings reports. And if you click on those, it's going to pull up the actual SEC filing itself. You can scroll through, look at the different numbers, see how those compare to the previous quarter or the previous year. And from there, you can look into the different fundamentals and do your fundamental research if that's what you're planning on doing. I will say, however, that for this strategy, we're also not necessarily going to be focusing too much on the fundamentals of these reports. The reason being is because, like we just mentioned, a lot of times the market is going to react a little bit crazy compared to what the numbers are actually showing. So we're not going to put too much focus on the numbers themselves. We're simply going to be looking for how the market is reacting to those numbers. So with INOD, this is a really great example of how powerful this strategy can be. We can see that, like any other earnings report for the most part, this was released here in extended hours trading. That's one of the nice things about this strategy. We don't need to be super quick getting in and out of these trades as soon as their earnings are released. We allow them to be released in extended hours trading, let them chop around, let them fake out other traders that are trying to get a quick dollar. And once the market opens the following day in this case, or later in the morning, if the earnings are released in pre-market, we're simply looking for then what is known as an opening range breakout. Now, bear with me here. I know this is something that we've talked about many times here on this channel, but when you're trading an opening range breakout based on an earnings report, a lot of times these are a little bit more consistent and they're a little bit more different than any other stock that might be gapping up in pre-market, especially if you're trading a higher price stock like we're seeing here with INOD. There's still going to be a ton of volatility and there's still going to be some fake outs here and there, but if you're trading the strategy the way that it's meant to be traded, this is going to be a very consistent way to trade an earnings report and trade that momentum that comes with it. Now, the crucial part here is that we're using the 5-minute chart. Sometimes you can even use the 15-minute chart, but you're going to be missing out on a bigger portion of the move when you're using a longer term time frame like that. However, you do not want to use the 1-minute chart, the 2-minute chart, or the 3-minute chart for this, because those first few minutes of price action once the market opens, there are going to be a ton of fake outs to the upside and to the downside, and you want to avoid trading within that range. So we're going to let that first 5-minute candle completely form and completely close before we potentially take any trades. In this case, if we zoom in here to the open a bit, we can see the high of the first 5 minutes is going to be exactly $33. The low is going to be $29.67. That is going to be our opening range for this earnings report trade. If we draw those lines, we have the high, we have the low. This is going to give us our breakout level, and it's going to give us our risk level. In other words, what we're looking to do is buy into this breakout using this low down here as our risk level with a stop loss just below that price. And we're simply then going to be looking to trade the trend and lock in some profits as the stock breaks out to new highs and as that momentum starts to pick up. The reason this is so effective is because we're not necessarily, again, looking into the fundamentals of the earnings report. However, other people are, hedge funds are, different trading algorithms that are running the market are going to be looking into those numbers. And if you're trading with the momentum and trading with the trend, after that earnings report is released, you're essentially trading with the money and setting yourself up for success without actually looking into any of the fundamentals. So in this case with INOD, you could have been buying here a breakout at $33. Later on in the day, it ran all the way up to a high of about $43.70. So there was potential there to lock in over $10 per share in profits. That means that if you had about $15,000, $16,000 traded in this account, that would be 500 shares bought. And by the end of the day, you would have made $10 per share in profit on that 500 share investment, which means that your profit would have been over $5,000 on this trade alone. So since you're waiting for that first 5-minute candle to completely form before you take any trades, you might miss out on a little bit of profit since it already moved from about $30 up to $33 in that time frame. However, you have to realize that that is a price that you should be willing to pay in order to have a much more consistent return with this type of strategy. And as you can see, there should still be a ton of profit potential with this type of trade, since these earnings report plays tend to have large trends that last for a majority of the day. Now, another great thing about this is that it is not only a strategy that works for breakouts to the upside, but you can also trade a bearish earnings report with a short position and actually profit from a stock moving lower as well. So for that, we can take a look here at this example with the stock LUNR. We can see this is an earnings report that was released in pre-market on this day. Again, we're not really interested in trading right after that earnings report is released. We're not really interested in trying to capture this move that's happening in pre-market. We want to let it chop around. We want to let it fake out other traders, and we want to let that first 5-minute candle completely form before we're actually going to potentially take a trade. In this case, a lot of choppiness in pre-market. We then have a high at the market open of $14.90. That's going to be our opening range high. Our opening range low here is going to be the low of $13.07. That is going to be our opening range. We're simply then looking for a breakout to the upside in order to buy the stock, or a breakdown to the downside in order to short sell the stock with that bearish momentum. In this case, with a short position, we would be using that high for our risk level, and we would be looking to cut losses on this trade if it happened to start squeezing through that level to the upside. So again, this is another great example of how powerful this strategy can be once that trend is starting to form and once you're trading with the momentum of the stock. In this case, short selling the breakdown here at about $13. By the end of the day, the stock would have hit a low of just over $10 per share. So there was potential there to lock in around $3 per share in profit from this short position on this trade. In other words, if you were to short sell 1,000 shares into this breakdown, you would have been able to lock in a profit of around $3,000 by the end of the day. Another thing to keep in mind though, with that being said, is that since you are risking above the high here, it is important to realize that you're going to have to size down occasionally if this is a very wide range. And that's just because, if you're short selling here at $13, you have to be comfortable stopping out at about $15. So you have to be comfortable risking $2 per share on this trade. And that means if you're not necessarily comfortable risking $2,000 in a potential loss on this trade, you definitely should not be shorting 1,000 shares into this breakdown, because this strategy really is only going to work if you're using a stop loss above that morning high. So that's just another thing to keep in mind with this strategy and when it comes to actually sizing your position with this strategy. All right, but all of that being said, that is my preferred strategy for day trading earnings reports. Every single morning in the Market Master group before the market opens, we post a list of the top percent gainers as well as the top percent losers. These are also live streamed throughout the day in our live scanners. But this is going to allow us to see the stocks that are moving the most in that pre-market session. Many times these are going to be stocks that just released an earnings report. And from there, rather than looking into the fundamentals and trying to determine whether or not the company had strong revenue growth and so on and so forth, you can simply wait for that opening range to form and then look for a breakout to the upside or a breakdown to the downside in order to take your long or short position and trade with the trend of the stock. So hopefully you learned something from this video and you found some value in it. If you did, please make sure to give it a like and subscribe to the channel. And remember, if you want to, come join us in the Market Master group and get access to our group chat, our day trade and swing trade alerts, our detailed trade plans, our live custom scanner streams, and so on and so forth. We are currently running that 50% off sale. It's going to be for a very limited time, so make sure to check out that link down below in the description and get signed up to secure your savings and join us in the group. Anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.